Welcome everyone. My name is Ed Baylog. I'm hosting the session this evening, and with me, also in attendance, the other moderator will be Rick Petticelli. I assist in writing the Wagner Daily. I do a lot of the research and a lot of the writing of the Wagner Daily each evening, and Rick does the Morpheus Trading Group stock sheet. So he'll have some commentary for you also this evening. If you have any questions, there is you have the instant message box. You just type your questions into the instant message box, and we'll answer them in order as we're able. Let's get going here and let's take a look. The theme for tonight was what, in a nutshell, what the heck's going on out there. We have a pretty wild market action, and I'm sure it's very easy to get chopped up in this environment. So what's happening here. We're going to give our analysis on what we see occurring across the major indices. We've got some really interesting price action going on, and there's a real tug of war that's occurring in the market. Of course, we all recall back in the S&P, in fact, in the market in general, on October the 4th, we had this massive reversal candle right here. At that time, we had predicted that an undercut of this swing low that occurred in August the 9th, that a sharp undercut of the swing low could very well trigger a reversal in the market, at least a temporary reversal in the market. And that's in fact what had occurred. Now, since then, we had basically 9 days of straight up action right into this resistance level right here, this 1230 mark. We came right up into this swing high, and now we've been hesitating and consolidating right below right at this resistance level. Something very important occurred the other day. We hadn't had any confirmation other than we had a very light volume rally. Notice that last time we spoke, we didn't have some information that we have now a week ago. One thing that, of course, what's been going on during this time frame is that we've had a very light volume rally. So that's really unimpressive. Irrespective of the size of the move, you have to be suspect whenever you get a move and there's not much volume behind it, especially when you have a lot of overhead. There's a lot of people that have been selling over the past several months, and there's a lot of resistance levels. So, but something occurred a few days ago, and what we got right here was this big accumulation day right here. It was a reversal and an accumulation day. Notice that we had gone sideways for 4 days, but on the 18th, we undercut this 4-day low. It looked as if we might lose support, but then quickly and sharply reversed, and on a big burst in volume. In fact, it's the only day. This was the only day in the past like 10 or 11 sessions where the volume was actually at or above the 50 period volume moving average in green here. So that was the only day. Well, this reversal candle, and also served as an accumulation day, and thirdly as a confirmation day to this reversal candle. So what we got here was a confirmation of a potential reversal here in the market, and I'm going to circle that candle also. So what we have now is an accumulation or a reversal accumulation day, and now we have a confirmation to that accumulation reversal day. And notice how we've managed to hold support at this level. Every time we've tested this level, we've come right off of it very strongly. Right now, we have a buy signal. There's a clear buy signal in the market that accumulation has begun, and that we're likely to head higher from here. However, the one thing that we have to wait for, the final part of that signal, is that things start to move higher. When I say things start to move higher, what I mean specifically is stocks that have been accumulating that haven't pulled back during this most recent downturn in the market. Anything that's held relative strength to the market, and Rick will be discussing this more in a few minutes, but stocks that have held relative strength to the market that that haven't pulled back, that didn't lose support of their 50 period or 200 period moving averages, or they quickly recovered those moving averages, we need to start to see new leadership form, those stocks to begin to break out to new highs. That's your final confirmation, is the price action itself. And that's the only thing that hasn't occurred yet. But there's a lot of long setups now coming into the market, so that's a good sign for the long side of the market. One thing I always stress, and I always tell everybody, is that rarely does the market give you what you expect or what you want it to give you. And remember, we've been in a correction here, a bear market correction for several months now, and the trends don't give up the ghost real easily. They don't go down without a fight. So my point is that I always try to think in terms of what could happen, what would be the worst thing that could happen to you if you were trying to get long here. And the worst thing that would happen is that you think, okay, I got a buy signal. Maybe you break out above this zone right here again, and then we get slammed back in, and then all of a sudden we come down and retest the 20 and the 50 period moving average. So you have to really be on guard for about any type of really whipsaw move in this market. It's just a dangerous environment to trade. It's very volatile intraday. The daily moves the intraday moves are incredible. I mean, they're insane. I'm going to show you something in a minute here that will demonstrate that. But I wouldn't be surprised. My point is, I wouldn't be surprised all of a sudden you don't think this is going to happen. We get a really quick sell-off, and I mean quick. We come down and we undercut these moving averages, the 20 and the 50, really quickly, and then reverse off of that, get back up into this trading range, and then maybe go sideways for a few more days or something like that, and then go higher. I mean, that's kind of I always try to think in terms of alternatives. What could happen? Visualize what might happen in the market. That way, it doesn't surprise you so much. It's not so shocking. The biggest point I can make is I can't predict specifically. Yes, that will happen, but I can say that as I did a moment ago, that the market tends to surprise the most people, to create the most harm to the most people possible. And that would be one way for that to occur. Would be a sharp overcut, and then a quick reversal, and then an undercut of this, and then a move back up. But there's little question now, with this confirmation day right here, there's little question that the market's begun to repair itself. Now, something that's very interesting and makes trading very difficult right now, because you have this tug of war going on. In last evening's newsletter, there were two trades that I posted. They weren't official calls or anything, but I said that XLK in danger of losing support. It had come down to this level yesterday. It had a distribution day. You notice the spike in volume here. But if we lost this, because we had the distribution day, not today, but previous day, Wednesday, we had a distribution day. If we lost this 2-day low, that we could lose support and potentially have a little bit of a pullback here. Well, in fact, what happened with XLK is we did, in fact, lose support of the 2-day low. But look at how it occurred. We get slaughtered. It looks like the market's going to go to heck in a handbasket. Just as quickly, we reverse intraday, and we end up reversing and closing near session highs. So the point being is that it's a very volatile environment. Obviously, there's people willing to step in, traders willing to step in and buy the dips, and there's a lot of whipsaw action going on, and also there's a very negative sentiment in the market still. There's a lot of negativity out there. All the news is bad. There's a lot of short interest in the market, so you would expect these kind of whipsaw moves. When you have heavy short interest in the market, all it takes is a very small change in price to elicit a big reaction in the market, and that's why you get those whipsaw moves. So This is just it's really a time for caution. Volatility, we're primarily swing traders, and volatility is not the friend of a swing trader. As you can see, you get into a trade, you're well in the money on it. If we didn't make the call, but suppose we had gotten into this trade, look at how quickly all your profits are gone. You're back up to break even, and now what happens? You have potentially a reversal going on here. Do we go higher? Are we going to run into resistance here and sell off again? You're just not getting the kind of price action that you'd want to see in a trade to be swing trading. It's just very, very choppy. And of course, the same thing here. I think I used DTO last night, but SCO is very similar. You have shakeouts. You have a shakeout here. You undercut the 200 period moving average. A big accumulation day. Okay, nice big volume spike. So it looks like, all right, we get above the 2-day high, we're going to take off. Well, what happens? Yeah, we sure do. We take off, and we stop at the declining 20-period exponential moving average. We stop right at it, reverse, and then close at the lows of the day. Come back into the trading range. So, the potential still exists that we could this could reverse again, and we could take another shot higher. But you can imagine now there's a knife fight going on. And it can be very whippy. We're just looking at really whipsaw activity, and any moves are seem to be very short-lived. So we're exercising a lot of caution, and frankly, we've been primarily in cash over the past week or so because of the market action, and we've pretty much been watching and looking for long setups more aggressively now that we have that confirmation day from the S&P and frankly from all the indices. Now, one other thing I want to mention is that we've had some earnings misses. We've had some of these big tech giants. You've had IBM, you've had Apple, miss earnings. There've been some misses out there. Some big Nasdaq names missed. Win missed. WYNN. And so that's certainly having a muting effect on the market. But let's take a look at something here. When you compare what the Nasdaq 100 did compared to the S&P 500, notice how we reclaimed the 200 period moving average already in the Nasdaq on the Nasdaq 100. If you compare that to what where the S&P is, the Nasdaq is way ahead of the S&P. That was the Nasdaq 100. This is a Nasdaq Composite. Even it's way ahead in that it's almost touched its 200 period moving average. It's way ahead of what the Dow has done, for instance. And if we take a look at the NYSE, I mean the NYSE is dead compared to everything. And then the Russell and the mid caps also have severely underperformed. But it's the Nasdaq 100. So now that you have the likes of Apple missing, and you have some other big names that have missed, it would stand to reason that now you get this muting effect, and it will give the other things a chance to sort of catch up to the Nasdaq, so to speak. So I wouldn't be surprised if you see shorting opportunities on the Nasdaq, and potential over the next, let's say, several days, week, whatever. Maybe 2 weeks, but more long opportunities, either in new leadership stocks in the Nasdaq, things that are breaking out for the first time, or things that are on the S&P or on the NYSE, that you'll see more leadership coming out of there for the short run. And once again, that would just stand to reason, because the Nasdaq's what's led this move out, and now to get a little bit of a retracement there or some stalling action there would sort of make sense. What I'm going to do here now is I want to turn things over to Rick, and he'll go over some stuff with you on the stock side of things.
Ed stole a bit of my thunder with a presentation, but I knew he would with concerning the follow-through day. But that's basically, our strategy. So we all run the same. So I'm going to briefly go over the follow through day. He went over the S&P. I'm going to go over the follow through day in the Nasdaq Composite. And so, some of the good signs we have right now in the market are that Nasdaq Composite and the S&P 500 is above the 50-day MA, and the 50 MA is starting to trend higher. Now, whether or not this follow through day, now there's the follow through day is on 10/18, which is right here, same date as the S&P, the higher volume accumulation day. We had a distribution day yesterday, which you don't really typically like to see after a follow through day, but that doesn't always in itself kill a rally, but that's not a great sign. And today is another accumulation day on the higher volume recovery. So reversal, a bullish reverse day, another accumulation day. So what does this mean? Going forward, as Ed said, we're not going to go into full bull mode right now, but certainly it's time to begin looking for long setups. And whether or not they work out isn't really our concern. I mean, of course, money, but we're just following a system here, and that's why we really don't let emotions come into play too much, and we just try to take what the market gives. So far, it's not giving us a lot in terms of options for long setups. This is what I'll go over briefly with you guys right here. What we like out there so far, ALXN made higher highs and lows where the market sold off, but it still needs another week or two. And you'll find most of the charts I'm giving you here are some of the top setups that we're monitoring, but they need a few weeks of choppy price action to set up a solid base. Amazon clearly needs a few weeks here. This move was too V-shaped, and if Amazon holds above 225 the next few weeks, probably don't want to see it go back to the 50, but that's a possibility. As long as it holds the 50, it's still going to be in play moving forward. ATHN is a really nice setup right now. If it can get back above this high right here, broke the downtrend line, so back above the highs here, probably with a little help from the market can test the $70 area. I would not be in a long-term hold mode for any stocks right now, though. If you do get a move in a long, you probably want to sell it. You know, anything more than 10%, especially if it happens in 2 to 3 days. Costco's setting up, probably needs a little bit of a handle, maybe like a 3 to 5 bar drift lower. Yes, Mike, we saw that they came out today, so we'll see where that opens tomorrow as far as ATHN. Cepheid is a little sloppy on the right-hand side, but you know it's done pretty good while the market sold off. It's set higher highs and lows, so it just might need a few weeks of tightening up here. HitK is another biotech, a little bit lower float, only trades about 180,000 shares a day, but you know tightening up, and that's what we want to see. And I'm just really going over these stocks pretty quickly so you guys get an idea what we're looking at. If you tape the webinar, you'll be able to go over the symbols later on. HOT's looking pretty good. LQDT is tight, holding up pretty good at the highs. Mako's a decent setup here, pulling back, forming a bit of a handle. Might see another week or two of price action between 38 and 40. Let me skip over a few. Stamp is pretty good. Acting, I mean, it's a fantastic breakout. Little pullback here from the breakout. There was no handle, as you can see. It was a pretty sharp, pretty quick reversal back to new highs with no handle prior to the breakout. So one could probably go long over today's high with a stop below today's low if you're an aggressive long, if you're an aggressive trader. ULTA, pretty ugly bar 2 days ago, but Lisa P, maybe a few days for some stocks, maybe a few weeks for others. As far as how long it's going to take for the basis to establish, that depends on the setup. ATHN might be ready to go now. Amazon needs a few weeks easily. ULTA could be ready to go now. It just had an ugly bar here 2 days ago. Probably needs to just go sideways for a few days, and then it might be ready to take off again. V is V-shaped, so that's a few weeks, not a few days. You'd probably want to see this tighten up and go sideways. And Virus probably needs a few weeks. This has been a pretty strong stock, and some of these stocks like Virus are. Let me show you a weekly. I mean, that's moved up quite a bit over the past few years, and this is very late stage, so it's probably a higher risk setup than something say like ATHN. which is why we like it so much. And there's a monthly chart of ATHN. I mean, it's a fresh breakout to new highs on a monthly. This stock is in no way oversold, overbought on the weekly. See this? It's just made new highs, so it definitely has some room to run. So as far as the short side, there's not a lot of setups coming off of our scans that I did. I ran some short scans before I came on tonight, and there's just not a lot out there, especially since it's already attempted to sell off for the past 3 or 4 sessions. So some of the weaker stocks have actually been able to sell off for a day or two, not producing too or not giving too much profit in the way of profits. And some of the other stocks are just really in no man's land and gotten around too long, and their setups are not ideal to go short. So we're just holding off on some of those until the setups are a bit more clear for us. So basically, we're looking at the market current conditions, time to get long if there's setups there. Probably don't want to get full size. Probably want to be light size and take it slow. Make sure the S&P and the Nasdaq hold above the 50-day MA, and for the most part, avoid distribution. And we want to see new bullish setups emerge. And that's it. There's not much more we can do other than that. So it's basically a waiting process for the next few weeks. So Ed, you can take it back over if you want.
There was a question earlier from Round Lot Steve, and Steve had basically the question had to do with when you clarify a breakout, identify within Dragon Scan, our software, how to enter, where to set stops and so forth. And I can give you sort of a quick analysis of how we look at things. I just happen to pull this particular ETF up just because it gives a decent example. It's an inverse ETF. I'm not showing this because I'm particularly bearish right now, but I mean, you could get a move out of this thing still. Market still hasn't. We still haven't had a full-blown breakout yet. So, like I said earlier, I wouldn't be shocked if we see, we could see a sharp sell-off real quick and get it over with before we would go higher. And if that were to occur, here's an example of something. All right, SMN. We've been setting higher highs and higher lows. It's obviously very volatile because it's an ultra short. Here we have an ETF that's had a big pullback into this support level. We've undercut it. Now we're going sideways. We're in this tug of war for the past 4 or 5 days, and we've been testing this 29.57 mark now twice in the past 3 days. And if we were to get above this, all right, then you could easily get a move higher. I mean, how long it lasts, who knows? Things don't tend to last very long right now, but let's say you get a couple of point move out of it. Normally, if assuming we were, hadn't received a buy signal from the market here recently, and we were still in a full-fledged sell-off. The way I would establish my triggers and stops and so forth is, okay, I got my pullback, I've come into support, I've undercut the support, I break out above this 23.57 mark. I would enter somewhere just above that, and I would set my stop below the prior swing low right here. And and then I would have my price target, whatever it might be. I might say, well, my price target is $30, or my price target's the previous swing high, whatever the case might be. And I would set my stop just below the swing low. If this swing low, it held 4 times here. We tested it, 4 or 5 different candles. If that can't hold, then why would you want to be in the thing? So you set your stop somewhere just below it down here. If it undercuts and takes that out, well, then you're out. Then you have a pretty decent risk reward here. So you're risking maybe $3.50 or something to potentially maybe make $7 or $8. And that's basically how we would approach entering. We look for a trigger. In this case, the trigger would be above this resistance level, our stop below this previous swing low, and we're looking for a decent risk reward where there's we have an opportunity to make a 2 or 3 to 1 gain compared to what the loss would be if in fact the stop got hit. Next questions. Dilip had asked, why are energy stocks so strong? I mean, pretty much we just look at the technicals. I mean, whatever the chart says is what the chart says. We don't really delve into the news behind anything. So, if and it's it's also, it's not unusual when if you're historically speaking, it's kind of a defensive play, often considered a defensive play when the market's selling off, that utility stocks are considered to be a safe haven. They pay big dividends, and they're not going out of business. They don't have the big fluctuations in sales and so forth with the economy. People still use electricity and water and whatever, and so they tend to be considered a safe haven by Wall Street, by big fund managers. But pretty much we just look at the charts, and whatever's strong is strong, whatever isn't. We're technical traders, so we don't really try to delve into the why something is high or something is low. We just look at the chart and say, well, we trade it based upon the fact that it's going down, we're going to short it, or it's going up, we're going to go long. Rick, I think you kind of answered Lisa's question. I kind of did also. Pretty much we just stay away from the whole news thing, because news sources, and you'll hear me preach this a lot. I mean, I'm always saying this, that they have to come up with reasons to justify the price action for the day. So they come up with their reason. Well, I mean, today we had news that the housing starts for the month of September or whatever were 0.7% worse than expected. I mean, that's really bad news, but it didn't matter. The market just shrugged it off and reversed and rebounded, and it was like no big deal. We had a big reversal day. So, to get caught up in the news. Now, if the market closed down on the day, what do you think the headline would have said? Headline would have been saying, well, probably because of housing starts, or probably because of housing starts and whatever's happening in Europe today, the investors are nervous. But then tomorrow, this market would be up because they'd say, well, apparently it wasn't housing starts that bothered the market, and really they weren't that upset about what was going on in Europe. Things don't seem as bad as they thought they were, so now we're higher today. I mean, within the same trading day, they'll use the same news event for opposite reasons. They'll use the event to say, well, the market was down because of that, and I've seen it. And then later in the day, they're saying they'll use that same event and say, well, the market was up because of that. So news just tends to try to fit itself to whatever the market action was. And at the end of the day, the market does what it does. The market moves in whatever direction it moves. And certainly, we haven't had very positive news the past several weeks. And in fact, it's been more negative, and yet the market's been going higher. So it just goes to show you that the news doesn't. The market creates the news. The news doesn't drive the market. Any thoughts on TVIX? Let me take a look here. And I see also here, Ron. Let me get yours. EUO, FXP, UUP. Okay, EUO. Let's take a look. EUO. Well, I mean, just like everything else, EUO, today it looks like you have a distribution day. 2 days ago we had at least an indecision day, if not a distribution day. I mean, you've just got really, really choppy action here. It's like, whatever way the market goes is where this is going to go. Obviously, if the market goes higher, EUO is probably going to go lower here. It's a tough call right now. I mean, there's too much indecision in the market, too choppy of action to really make a call on this. I mean, it's holding support still. The trade still hasn't hit its stop. It's it's holding up, but certainly there's a tug of war going on. You just have to let it play out. Now, as far as there's no simple answers on stuff like that. FXP and UUP. Okay, FXP. Well, just FXP did what I wouldn't be surprised if some of this other stuff does, where you get that one final, one more shakeout move here, where some of this inverse stuff, the market takes a dive one more time quickly. But is that the kind of price action you want to see? No, I mean it's not great, but certainly, um, you know, the reversal candle is concerning, and I think what you're going to find is just this choppy action. If it goes higher, it's going to do so on really wide swings, intraday swings. And right now, I mean, I wouldn't, I certainly would rather be long this than short this, but um, this is just indicative of what's going on in the market. And I think when you have we have the confirmation in hand that says, all right, we have a buy signal from the broad market. It doesn't mean you rush out and you buy everything, because we still have to have the setups still have to occur and they still have to trigger. But I think that's it's what you're seeing here. You're seeing something that's that's weak. It's got you're dealing with FXP. I'm sorry, it's strong. It's an inverse. Um, it's strong, but it's still fighting what's going on in the broad market. So, I mean, to be honest with you, right now, I'm just a big proponent for not really trading much at all. Just don't do anything. These are the kind of environments you can really get slammed in. And UUP, you're going to find the same thing. UUP is just going to be, the same thing. It's looking at UUP is the same thing as really looking at EUO. One is just the inverse for all intents and purposes. And, if this market heads higher, the dollar is likely not to really go anywhere. It either just chop around or might head lower. But, right now it's just indecision and it's just hard trading. Oh, TVIX. All right. And that's the VIX. Well, I mean, what are you seeing? We're seeing that that volatility starting to get knocked out of the market in terms of there's more positive sentiment in the market right now. Could we get another spike in the VIX yet? Yeah, we could. But right now, I just think we're what's not good is that the sell-off was so sharp, and now you're coming back up into this resistance. So now you have people willing to step in and say, okay, well, no, we're gonna in the broad market they're saying we're going to buy. With the TVIX they're saying, well, we're going to sell, we're going to short. All these charts look the same for a reason, because they're just a reflection of what's going on out there. And by the way, that's why when Rick went over various charts with you earlier, why are we looking at things that like ATHN on the stock side? Well, it's because these things never pulled back. And look at how tight the price action has been recently. The volatility's gotten knocked out of this. It's nice tight action. We're setting higher lows. We're doing the kind of things you want to see. Volume's starting to pick up now. I mean, we had a false breakout. I mean, everything is lining up here. We had an undercut. This thing could take off, obviously. It might do it in a day. It might do it in 2 weeks from now. Who knows? But and you could get knocked out of the trade and have to wait for another setup. But the point being, these are the kind of things you want to look for on the long side, stuff that didn't break down during the carnage of the past 2 months when the market was getting obliterated. This thing really didn't go anywhere. It just kind of hung out. In fact, during part of that time, it rallied. So this thing has been really strong. ERY. Well, I mean, the energy bear. I mean, this thing, it's got a lot of overhead now. I mean, we're looking at something here where, yeah, I mean, it's at a big support level, but now you're caught below all these resistance levels. You have the 200 period moving average. You have the declining 20 and 50 now. You have big resistance here, and we have a big shelf of resistance. We broke this level right here. So, I mean, would I expect to see a bounce in this thing? Sure, but it wouldn't be my top choice for something to, get out there and buy right now. I mean, it really broke down compared to some other things. Just by comparison, if you looked at something like SMN, I mean, this didn't even come down to its 200 MA. So if something, if an inverse ETF was going to go higher, and you had a, you wanted to, bet money on it, so to speak, and that's what you're doing when you enter the market, right? Would you want to say that SMN has a better chance of moving higher right now when all it has to do is get above its 20 and 50 period moving average here, or ERY? I mean, you're fighting a lot more here. There's a lot more overhead here. So, this isn't something I'd really be interested in right now. It's something I would just kind of stay away from on either side. I don't know that I would try to short it either, because we just came back into support of this base that it broke out of. When it broke out here on this massive volume spike. Now we're back into that support level. I mean, we just broke out of that, so is it likely just to lose that here? It's just not something I'd want to mess with here. I always say there's always better trades out there. Don't focus in. If you're in a trade and it's a bad trade, just get out of it and go into something that's a good trade. Don't hyper focus on something just because you're in it, in the hopes that it'll come back or whatever. Or if you're not in it, why look at this when there's something like this, when there's 20 other trades out there that are much better candidates. There's much better things could happen. So my attitude is expend your energy and place your dollars in things that are going to give you the best chance of success. Goog. Okay, Goog. I mean, you had this gap up. I think Google had earnings the other day or something. So apparently whatever the news was, it was they liked it, the earnings news. Which, by the way, that's one of the few things of news that one of the few things that we really do take concern with is earnings. We're always cautious about earnings because that's one thing that can legitimately move a stock. It isn't just some talking head saying, "Oh yeah, this is why the market moved." It's something that's real. And they had good earnings. But right now, what do you have going on? It's just really choppy action for months and months now. I mean, you got to go back to 2009. What is this? December of 09. And all we've done since December of 09 is chop back and forth between the highs of somewhere around 630 to the lows right around 470 or so. So we've been between 630 and 470 now for what, a year and a half or more, almost 2 years. I mean, Goog is just stuck in a big old trading range, and every time it gets up near the 600 mark, they start selling it, and every time it gets near 470 or so, they start buying it. So it really isn't a stock that that I have a lot of interest in terms of its potential to the upside. I mean, if you're a day trader or you want to play something that's in a trading range, I guess when it gets to extremes in the range, you short it when it gets near the highs and whatever. If the market's in a downtrend and it's getting near extremes, then. But I don't know. It's one of those stocks you're just better off looking at something else. It's just not that the price action is really wide. There's nothing to indicate that Google's going anywhere soon. There's better things out there. There's better setups out there. Spend your energy on the stuff that has the best chance of moving. ATHX. Okay. Yeah, I mean something like this. We really don't even delve into issues like this. I mean, you're just dealing with something that is not widely traded. It's very thinly traded. It's essentially almost a penny stock. Institutions can't even own it. It's things like this tend to be just erratic, and from a technical standpoint, and you can get killed on the gaps. So this, and if you wanted me to analyze this chart in particular, I mean, this looks really bad. I mean, this is something I wouldn't want to be near at all. It looks like the thing could be out of business here soon based on what the chart looks like. It's just really bad looking. It's in a nasty downtrend. It's sitting near its all-time lows. I just would never trade anything like this. Just too unpredictable and too thinly traded. And I'd have no desire to really short it here. There's a big support level right here, and I'd have no desire to go long because it's in a downtrend. It's just been getting pummeled here since early 2010. What do I think of Q-Core? Let's see, Q-Core. I mean, it's very strong, obviously. I was looking at this the other day. I mean, this thing it still has some juice left in it. It looks like it's prepared to take another leg higher here, but it's a more late stage type move. I mean, we've gone from $5 to almost $35 here. That's a big move. It's still, and this has been going on since October. Well, the first breakout occurred in February of 2010, February, March. So I mean, this is probably late stage, and if you notice, the price action's starting to get kind of wide here. It's whipping around. Some really wide moves up and down. It's not very tight. As far as this is concerned, for it to be a long entry for me, I'd want to see it come back down into this 20 period moving average. I'd want to see it pull back and then consolidate, see the price action tighten up. So in other words, have it pull back like this, like right here. See how tight that action is? Yeah, you had this big breakout bar, but look at how the price action tightened up for several weeks. That's the kind of action I want to see. I want to see this thing tighten up, go sideways, come back into this 20 period moving average. Should just go sideways for like the next 2 weeks. Give this 20 period moving average here time to catch up. Just consolidate, undercut that moving average a little bit, let's say, and then look to break out of a consolidation range like this. So there's your entry right on this day right here. Same thing here. It tightened up, and there was your entry. Tightened up, there was your entry. It tightened up and then it gapped. So there's not much you can do with that. I mean, it just went. So, but now it needs to tighten up again. This is the kind of action you want to see. And look what we have. Since this gap up, we've had this. Bam, bam, bam. We're all over the place. It really needs to tighten up some. Otherwise, you're just guessing. And there's no base action from which to rally from. So just as when you rally off of really loose patterns like this, there's a tendency for this to happen. When you rally off of a loose pattern, you rally and then bam, you sell off, and then bam, you rally, and then bam, you can sell off again. So we need to see some price action tightening there. Yeah, it broke out. Yes, it did. Your question here was didn't it already break out about 10 days ago? And the answer is yes, it did. But now what it needs to do is tighten up. And frankly, the way it broke out here, this wasn't very tight action. I mean, I don't like to see that kind of breakout where you have this massive pullback. It's real sloppy, and then it just breaks out. That's just not good price action. It's not what we like to see. In our back testing and what we've done over the years, we found that these type of breakouts tend to not hold up really well. You want to see some tightness. Like I would have rather seen this thing go sideways here, sideways here. Forget about this big dip here. If it had just gone sideways from here to here and then broke out, that's the kind of thing you want to see. But this real wild, whippy gyrations are not what we look for. Let's see here. Apple. What's our view of the Apple earnings miss recently? Well, they missed earnings. I mean, I guess it's not good for Apple, but look, this earnings miss occurred, and it's doing it from dead highs. It's coming back into resistance or support here. I mean, I think the way Apple reacted during this whole market carnage that occurred, it was very positive. My long-term prognosis for Apple is probably not great. I mean, this thing is really in its late stages of what it's capable of doing. I mean, it's just been going on forever, and that's their first earnings miss in like 6 years, I think. I mean, that's absurd. It's amazing. I mean, a company like this to grow like that. But this price action is starting to get really crazy now. But it's a widely held stock. You want to see basing action, and what we have going on right now is just wild whippiness. Could this thing go a lot higher? Yeah, I mean, Apple could go a lot higher. It could repair here. At the end of the day, this is a very widely held stock. It's held up tremendously well during this sell-off in the market, and really what's happened here. I mean, we rallied up into earnings, we sold off, and we're right at support. I mean, if we hold these levels, if we hold in here and just go sideways for a couple of weeks or a month, and everything cleans up in the market, this thing could head higher again. I mean, I certainly would not be looking to short Apple here if that was the question. I'm not really thrilled about going long Apple here only because there's better trades out there. There's just better looking trades. But as long as it's above all these moving averages and it's acting the way it's acting, and there's no reason to be trying to short Apple. At least not at this juncture. Just my opinion. I don't ever like to short anything that's this widely held, that's above all that's moving averages, that that's been in this kind of a massive uptrend this long, and it survived all that market carnage. That's just something I don't have a lot of interest in trying to deal with on the short side. And once again, on the long side, it's just too sloppy of a pattern right now. The price action is way too loose. But as far as their earnings are concerned, I mean, I really don't care if they hit or missed earnings. I mean, at the end of the day, I just care how the price action, how the market reacts to it. And so far, the reaction hasn't been that bad, really. By the way, the one thing about the Apple earnings miss that I think is relevant is that because you have selling going on in Apple, it's having that muting effect on the large cap NASDAQ stocks and on the NASDAQ in general. So it's going to help to explain the divergence in the NASDAQ, and as would misses by the likes of WYNN, WYNN. Whoops. I mean, the same thing. WYNN missed. It's been a pretty strong stock until just recently. And their earnings miss certainly isn't going to help in terms of the NASDAQ. I mean, you have a lot of volume, a lot of churn going on, and I can see, big names like this missing are going to have an impact on what the NASDAQ does over the short run. Shauna, you asked what constitutes a market buy signal. Well, for us, it's really two things occurred. One, I went over this. I'll go over it again for you here. Let's see. Let's go to. Let's take a look at the complex. Okay. The first thing we had was we had the breach of a major support level. So we came down, and several weeks ago we had stated, in fact, in one of these webinars, we stated that if we were somewhere around here, I think we were in this move down. We said if we get a big undercut of this low, this swing low right here, this August the 9th low, right there, that very well could serve as that the market could reverse off of that. We could see a reversal off of that, and buyers might enter. Well, first thing you look for is we did get that undercut. So they nailed everyone. Everyone got short. Everyone thought the world was going to go to heck in a handbasket. We broke this swing low. We broke it. Everyone gets short. And what happens the same day you think the world is coming to an end that day, and then instantly, bang, whatever time of the day, this thing just reversed. The market reversed and shot up. Massive volume hits the market, the biggest volume that we had seen in several months. Look at that volume spike right here. This volume spike right here. Massive volume. We reverse. We close at the dead highs of the day. And the next 2 days on pretty strong volume, close to above average or close to average volume for the 50 period moving average, we move higher. Now, what we were looking for next was a confirmation day, and the confirmation day is a day where you have a big spike in volume, and you reverse. In other words, you're confirming this candle. The confirmation day is an accumulation day where the volume is higher than the previous day's volume, and you form a reversal candle. So that's what occurred on this day right here. Right here. We had very, very light volume for 3 days. Then we get a big sell-off below the support level. Right? We hit our high here. We undercut this low, the previous day's low. So the previous day we had sold off. We undercut that low as if we're going to lose support, and then we reversed only to close at the session highs on a big expansion in volume right there. That volume candle, that volume bar is about 3 times bigger than the previous day. So this day confirms right here. It confirms this day. So now we have a confirmation day following this, and that was our buy signal. So we're like, okay, now we got to start more. We're always looking for stuff on the long side. We're always looking for stuff on the short side. But what this told us was that you're more likely to see a lot more long candidates coming up, and that we need to be watching stocks on the long side of the market. Now, the final part of this equation, what has not happened yet, is we haven't gotten confirmation yet from price action. What I mean to say by that is these stocks haven't broken out yet. The ones that have held up really well, okay, the ATHNs and so forth, AXLN, or ALXN, they haven't broken out yet. They certainly didn't fall apart. When the market was falling apart, these things were either going higher or just going sideways. ATHN. When the market's falling apart, they were just more or less going sideways. They never lost support of these major moving averages. They never got close to the 200 period moving average. The price action stayed pretty tight considering the volatility in the market. So the only thing we need now is the confirmation that these things start to break out. Then we know, okay, now we've got new leadership in the market. We got new things moving higher. This thing's ready to rock and roll. Well, until you have things breaking out to new highs, it doesn't do much good to have a buy signal and then nothing goes higher. It doesn't serve much purpose. But that's what you're looking for next are things that are looking to move higher. Same thing with something like this. It's been very strong during the sell-off. We're consolidating again. Like to see the price action tighten up and then break out to new highs. But notice we haven't broken out to new highs yet. Just by example. So that's what gives you confirmation. Is you get that day that follows that big reversal candle that occurred in early October, on October the 4th. We've got confirmation across all indices. So we would not be in perma bull mode yet. We're not like on a scale from 1 to 100. We're not 100 on the bullish mode, but we're certainly well to the right hand side. TLT has double topped. Full exit went for 50-day MA. Do you consider long candidates? So what an entry price? TLT. Let's take a look here. I mean, right now, normally what I would look for in something like this is, I would want some confirmation. Normally, I'd want some kind of undercut of this, just prove that it could hold this support level. So we have this 6 or 8 day range right here. And normally what I'd want to see is I want to see that it can hold this. All right, so maybe some kind of undercut of this level, and then it comes back up into this range. And let's say it had already done that. Let's say that this candle right here did that. All right, I'm going to turn this candle instantly into a reversal candle. Watch this. Pretty nifty. All right, now we have a reversal candle. All right, so let's say this is what we did today. We undercut this, and man, we shook everybody out. We scared the heck out of everybody, and then we rallied back up and closed in the top third of the range. Well, then I would be looking as an entry. I'd be looking for, possibly like right above this swing high right here, to enter above this swing high. And, then you'd have your stop. I'd put my stop down here below this swing low. I mean, that would be one way to approach it. Just, it all depends on how the real candles happen to shake out, how they actually form. But if this is what I was looking at, and then tomorrow I got a candle that looked like this, let's say I got this, if that was my candle, then, I'd entertain entering above this, this high right here, and just place my stop, below this. I mean, that's a pretty wide stop, but that's what you would need to do if you got that kind of a wild move. Of course, this is all hypothetical. I mean, there's reality, but for right now, it's like there's no setup yet. It's just too early to tell, and the likelihood of this thing going higher without testing this support level, normally that's not going to happen. Normally, you're going to get a test of the support level. I mean, we'll see, but if it were just to go higher from here, I guess you could entertain taking it above the swing high, even if it never tested. And then I would just use this support level, below this moving average as my stop. That's probably how I would play that. Maybe one more question here, and then we got to get going. It's getting late. I might have already answered this question. Since I touched on, I'm going to touch on it again real quickly. Steve asked if, with the earnings miss on Apple yesterday, does it mean it's pretty much over on the trading, except on the downside? And I would say no, not necessarily, not at all. It's how the price action and how everything else works. And it doesn't really matter, if you had an earnings miss, you can hit earnings and stocks fall apart and they have good earnings. You see it happen all the time. Just one word and something they say, and that's the end of that. Apples would still be in play on the long side. There's no question about that. I just feel there's better setups out there to trade. It's just got really wide price action, and it's a late stage stock, but it's widely held, and if it catches any kind of traction, that thing can take off. It could run 100 points. GG, that was the one. This will be the last one for the evening. All right, here we go. Oh my, yeah, I mean, this looks pretty bad. Most of these gold producers, or these charts look really bad. Big breakdown here. You have a big, here you have a reversal day, and it looks like you have accumulation going on, and then a Wednesday, it just falls off a cliff. So this looks really bad. I mean, this could be one of those things where, if this were to bounce back up into this, if the market reverses here, I'm not really interested in being short anything, but over the next several weeks or whatever, do we see what happens? If this thing rallies back up into this 20 period moving average, it's certainly shortable. The chart looks really bad here. I certainly wouldn't want to buy it. That's for sure. But GG looks weak, and that's like in the ETF world. GDXJ and GDX serve the same purpose. GDXJ and GDX, it's exact same pattern. So any rallies would be shortable. It's just that I don't want to really. If the market gains a lot of traction here, I don't have a lot of interest in being short anything. But for the moment, until we get some breakouts going, this is very weak. This whole sector is weak. One thing I want to do here, last thing, is you guys, anyone can sign up for your free trial. If you just go to www.morpheustrading.com, sign up free trial. I'm going to post this for you. You can sign up for a free trial. It doesn't cost you anything. You can go there, sign up for your free trial, see what we're all about. We try to provide a lot of good content and, good Q&A sessions, and keep everybody out of trouble. Also, I'm going to post this. You can see our track record. We just posted the results from last month, and when everyone else was getting slaughtered, we did, quite well in the market. Net return for the period, 10.31%. And I think, the name of the game is, knowing when to be in the market, knowing when to be in cash sometimes, when do you trade, when don't you trade? And, right now, recently, over the past 10 days or so, we've had a few trades, but pretty much we've been kind of sitting on our hands a great deal because of the price action and the fact that, we knew a reversal was possible. We just didn't have the confirmation. Now we have some confirmation, and now we just need the price action to follow through on that. So, but anyway, please come join us, sign up, and like I said, we work hard to provide top quality content. We don't hype things. You won't get a lot of bull crap out of us. We tell it as it is. If we have a bad trade, we post it. You see what our trade is. We trade the same things in our hedge fund, so you pretty much see what's going on in reality. And you can always ask us any questions. I mean, if I have a bad trade, I'll say it and I'll explain why I thought it was a bad trade, and the results get posted just along with the good ones. So it's not some place where you come and they just pump you. They give you 50 trades and then 3 of them work out, and they say, look, and then look at these 3. We were so great, and the other 47 were horrible. But it doesn't work that way. You see, it's very transparent, and what you see is what you get. So I appreciate that, Frank. We try to provide just good information all around. Thanks for joining us tonight. Thanks for all the great questions. And once again, I've probably been a little more windy than I should be. Rick always tells me he's gonna, put electric shock collar on me or something. But thanks for being here.